2020 emerged as the year that oil and gas companies got serious about climate change. And 2021 is going to be an intensification, shall we say, of those efforts. We're going to talk to Amy Bowe, who's the head of carbon research for Wood Mackenzie, about what global oil and gas companies are up to. So welcome to the interview, Amy.
Thank you. It's a pleasure to be here today.
Let's start with methane emissions because that is a keen focus of oil and gas producers everywhere. What are they doing to reduce methane emissions?
You're right. Methane is absolutely a huge focus for the industry for two reasons. One, well, obviously methane has a much higher global warming potential than CO2. So depending on which IPCC report you refer to, it's somewhere between 23 and 28 times as high as CO2 on a 100-year basis. So therefore, every ton of emissions in terms of methane has an outsized effect in terms of climate change and global warming. So it's really important to try to address methane emissions from the sector. Secondly, though, there's a lot of uncertainty around the actual level of methane emissions from oil and gas operations. And this is sort of the other primary area of focus. If you look at some of the academic studies that have been conducted, they would suggest that the industry is emitting multiples in terms of the volumes that the industry itself reports to be emitting. So I guess a lot of the focus for the industry right now is one around actually understanding the footprint associated with their operations in terms of methane emissions, and measurement is a big part of that. So trying to put in place systems to better measure and capture the actual amount of methane emissions, and many of those are using sort of aerial technologies in order to get a more comprehensive view, because the challenge, of course, with methane is that there's so many different multiple point sources, particularly for onshore operations, that it can be really challenging to try to put in place measurements to capture those. And then once you measure, then you can think about reducing those and addressing those leakages.
Let's talk also about emissions intensity. And this is an interesting issue in Canada because the oil sands company, or oil sands industry, which has very high emissions intensity in its heavy crude oil, keeps pointing to dropping emissions intensity even while absolute emissions go up. And I would assume that other sectors of oil and gas around the world are grappling with the same issues. Are they facing a fair amount of pressure to get both emissions intensity down and absolute emissions down?
This is a challenge. So as we've seen over the last 15 months or so, there have been a raft of different climate targets announced by multiple different companies within the industry sector, ranging from the majors to NOCs to smaller independents. And the challenge is that none of those targets are really defined on a standardized basis. Some companies will set intensity-based targets, some companies set absolute targets. If it's a net zero target, it effectively addresses both, but not every company does have a net zero target. From our perspective, both of those are necessary. So in order to understand how any company or how the industry overall is aligning with Paris Agreement objectives, we really need to have absolute targets to understand the total volume of emissions coming from a company's or the industry's portfolio overall. But in order to sort of assess companies of different size and different types of operations against each other, it's helpful to have intensity-based targets. And particularly given that many of these targets are going to need to be progressive, understanding sort of progressively a benchmark that companies can move towards, it's really helpful to have an intensity-based metric as well. But you need both. It's not a question of one or the other. Ultimately, we do need to get to a point where absolute emissions are reduced, but both types of metrics are helpful.
Now, I understand from your materials that emissions intensity has emerged as a competitive differentiator. Could you explain what that means, please?
Yeah, so first of all, this is very early stages still, but we are starting to see that in some cases, companies are competing for contracts on the basis of emissions intensity, or rather it's one of the factors that is now considered in terms of awarding contracts. This has particularly come out in relation to LNG. So we have seen a couple different, I guess, bids or there's been a couple of different contracts or requests for proposal for contracts essentially that have included emissions intensity as one of the criteria against which suppliers would be assessed. We would anticipate this expanding, and where in particular we think that it will become even more widespread, or what would drive this to be a broader metric, is when we start looking at mechanisms, for instance, like the EU carbon border tax and how that might be implemented. Now, there's a lot around that which hasn't been defined, including which commodities it might be applied to. But to the extent that we would expect to see an expansion of carbon border taxes or similar types of mechanisms globally, you can begin to envision a world where companies are going to increasingly compete on the emissions intensity of their supply and potentially get premiums in the market for what are effectively low intensity products.
And well, let's talk about the spread of carbon pricing because that's been kind of slow to take off globally. You know, in Canada, there's a large emitters tax for oil and gas production. We haven't seen one in the US. We have one, the EU system, of course. Do you anticipate in this year and coming years that carbon pricing will spread more widely?
Absolutely. We would expect it to spread. As you say, it's currently rather limited in terms of the jurisdictions where we do see a carbon price, and in particular where that carbon price is applied to the oil and gas sector. However, as more and more countries begin to actually implement policies to meet Paris Agreement objectives, we would expect carbon pricing mechanisms to expand. There are some notable developments in that area. So China launched its national emissions trading scheme this year, which obviously China accounts for a huge component of global emissions. Now that national trading scheme currently doesn't apply to oil and gas, but as that continues to be rolled out and expanded, presumably at some point it would address emissions from the sector as well. And we would expect more and more countries to begin to put in place carbon pricing mechanisms as well, potentially even, although it remains to be seen, how that would work under the Biden administration. And once you start getting some of these key countries, including China, the EU, and potentially the US, obviously Canada is also a big economic force, having carbon pricing, then that also begins to put in place some of the some of the mechanisms that we would need to really start to see a global carbon market emerge, or more convergence in terms of the different regional markets that there might be globally. So we would expect this to have to be something that the industry will need to grapple with increasingly.
Let's talk about a timeline for that for a moment, because my take on this is that probably between now and say 2025, it'll be emerging and we'll see more progress on it. But the real progress on regional markets merging or becoming more, the carbon price going up will probably take place after 2025. Would that be a fair observation?
I think that's probably fair. One of the biggest barriers in terms of defining what a global market look like, or trying to get more certainty around that, is the fact that even the principles around that haven't been agreed. So that's one of the big outstanding articles that will hopefully be addressed and agreed at COP26 this year. But particularly until we do get better visibility on that, it's difficult to sort of anticipate it being or occurring in the nearer term. And even once that's established, as you say, I think it's going to take time really for individual countries to put in place the necessary mechanisms, and then for some convergence to align after that. So it's definitely a longer term development.
Now, what we've talked about so far is a lot of challenges for the industry. But one of the good news stories has been, and I guess will continue, to be new technologies that are designed to reduce emissions from oil and gas productions. What can you tell us about that?
There's a host of different options to begin with, and that can range from relatively low-cost options, looking at things like energy efficiency measures, up to much more capital-intensive mechanisms. It's probably fair to say that the technologies, though, that will have the greatest impact in terms of their mitigation potential probably sit towards the upper end of that cost spectrum in terms of what it would take to really implement those. And those technologies are particularly around electrification, and really, for electrification to have a meaningful impact or to get near to sort of net zero, it has to be electrification with renewables or other zero carbon forms of electricity. So for instance, Norway is a great example of a country that's leading in this area because of their high concentration of zero carbon hydroelectricity. British Columbia, though, is another example of a jurisdiction that also has this benefit. And we are starting to see developments in British Columbia be integrated with grid electricity, which is largely then zero carbon. So that's probably one of the more meaningful technologies, but again, requires a lot of capital deployment in some cases in order to do that, depending on where an asset is located and how easy it is to attach to a grid or to integrate with other renewables. For some assets, CCUS might also be an option, but certainly not every asset is a candidate for that. And then other things to really address it are, things that the industry has been struggling to do for years. So reducing flaring through associated gas utilization, or otherwise re-injecting that. Maybe there's some opportunities there to look at producing blue hydrogen. So there you'd have to kind of combine that with CCUS, but it's another potential way that you could monetize gas, which might not otherwise find a market. And obviously, as we've just discussed, methane loss mitigation. So those are probably the areas where there's most impact, but there's a lot of other opportunities for mitigation. And when you go down the supply chain even further, then there's even more options. But again, in terms of what's having the biggest impact, those are probably the key four.
Amy, thank you very much for this. Really appreciate it.
My pleasure. Have a good day.